Well, HCLTech is, of course, the one in focus, largely inline set of numbers, but of course, expectations were higher. And the stock is reacting accordingly. My colleague Rima caught up with the management of HCLTech, began by asking them about the company's decision not to raise their organic growth guidance. Listen in to a slice of that conversation.
Our earlier guidance was 3.5% to 5%. Now we have raised the upper end of the guidance from 3.5% to 4.5%. So the new guidance is 4.5% to 5%. So 0.5% increase in the lower end is due to the organic improvement, and 0.5% is through the contribution from the HPCTG asset that we acquired. So overall, it's 4.5% to 5%.
But CVK, the asking rate for Q4 is minus 1.3 to plus 0.6%. Which means you aren't expecting any pickup, even if you account for the reduction in seasonality in your products business.
Yeah, so the software business, as you know, will have a big seasonality we had a big peak in December. Now that will come off in JFM quarter. And as I discussed yesterday as well, I think our momentum across all the verticals is continuing to pick up. And there will be some impact because of a large program coming to an end in the retail CPG segment, where we had a 14% sequential growth last quarter. Now, to backfill that project with new projects, it will take some time because some of the deal wins have happened towards the end of in December quarter. So that pickup will happen towards the second half of the March quarter, and that will continue into the Q1 of next year.
And what would be the loss in Q4 because of this large retail CPG program coming to an end?
I think that will be roughly $30 million.
About $30 million. In the current quarter, you also spoke about some delay in signing certain large deals and renewals. Can you tell us a little bit more? Was it one specific deal, or is it a little more broad-based? And what's happening on the client corporate conversations now?
No, I think overall the conversations, the lot of good interest in using generative AI for both innovation and efficiency, and that is directly leading into a lot of conversations on data application modernization, some more cloud migration and transformation kind of opportunities. So I think the conversations are getting a little more productive in terms of good programs that could materialize for us. We saw that in end of September as well. We did indicate there is some green shoots of growth in financial services and tech as well. We saw some improvements, and that is reflected already in our broad-based growth in Q2 and Q3. Now Q4 as well, across most verticals we will grow, except some of the specific things that I called out will have an impact in Q4.
So Q4, all verticals should grow, ex of retail and CPG?
It would be more broad-based. There could be some could be flattish, but I think the way you should interpret this is every vertical has some dynamics that plays into every quarter, but is the new additions adequate enough to kind of offset some of those reductions is what we should see. We are quite positive of an all-round growth in Q4.
Positive of an all-round growth in Q4. Shiv, in Q4, typically you have the wage hikes for senior management. So Q4 margin should be lower than Q3, and what would be the impact of hikes?
So as we announced last quarter also, the impact is going to be somewhere between 50 to 60 basis point. Yes, the margins in next quarter are going to be slightly lower than Q3 because Q3 has an impact of seasonality of the software. That's the only variation I can see. Otherwise, rest I think it should be fine.
But if client conversations are positive, your deal wins have been stuck in this $2 billion band.
Yes, I think there is a little bit of mechanics there. If you see, the ACV has grown very nicely, and the tenure of deals are becoming a little shorter, from 3 years to 2 years. Now it's about 1.6 kind of tenure is what we are seeing. I think there is a good momentum in a number of small deals. and that has a potential to convert to revenue quicker. Some of the large deals conversions continue to be a little slow, but we expect that to pick up with some of the uncertainties behind us. We think the large deal momentum should come back in this quarter and maybe Q1 of the next financial year.
And how would you qualify CVK discretionary demand as you see it right now versus what it was 3 months ago?
It's definitely better.
Okay. And it would be better across which verticals?
I think barring life sciences and healthcare, all verticals, it looks good. And maybe a little bit in energy and utility, some softness, but financial services is good. Tech vertical is looking good. Telecom also, there is a lot of efficiency-led improvements that clients are looking for. That is also creating good demand. Then manufacturing is also looking good. Retail, CPG as well. Barring some one-off things that might happen quarter to quarter, but the general theme is positive across most segments. And you were talking about large deals, and we announced one deal. I mean, of course, it is part of our IR pack that we released yesterday. This is a strategic partnership between HCLTech and Microsoft on transforming the contact center space using generative AI and cloud solutions. So I think there is a lot of interest in using generative AI to transform different aspects of business, and contact center transformation is a big theme, and we are very well positioned. And this partnership with Microsoft will give us significant capabilities in conversational AI, conversation design, and things like that, which are going to be very instrumental in driving the true leverage of generative AI in the contact center business.
And this would be a large deal? Would this be the first large generative AI-led deal?
Yes, I would think so.
Just getting back to the vertical-specific outlook, what is ailing life sciences and healthcare? Even the TCS management sounded downbeat on that particular vertical. So what is the exact, regulatory headwind that you fear? Or what's holding back the clients?
I think some of the firms, especially in the medical devices, they're also going through certain inflationary challenges and cost increases in their own supply chains. I think that's kind of putting a little bit pressure. And I think that should also ease. That's the way we see it. Maybe it's a quarter or two away, but definitely we have a good pipeline even in life sciences and healthcare.
Shiv, what's the outlook on hiring, for calendar year 2025 or the current quarter, and the view on attrition? Is attrition going up or is it going down? What's the visibility?
I think on hiring front, I think this quarter we hired around 2,000 freshers and added at a company level over 2,200 or so. And for the remaining next quarter, the plan is to hire at least add another 1,000 freshers. And given the uptick in slightly, broad-based situation, so it looks like I think next year we think that we would increase our fresher intake substantially, but it's going to be more the specialized skill hiring than the numbers. That's the plan we have for next year.
Okay, that's HCLTech, and now we know that it seems like the ramp down of one contract, a reasonably large size contract in the retail vertical, is making them a little cautious, and that's why they've not increased their guidance, the upper end of the guidance, and that is the disappointment that's playing out on the stock price. Otherwise, the earnings were fine, commentary is largely positive, but right now 9% down on the stock. Let's